wild ride for stocks this week, rallying in anticipation of the Fed decision, followed by a steep two-day sell-off. Forbes media chairman and author of the book Reviving America, Steve Forbes, is here with me now. What's your take on the sell-off that we saw today and yesterday?
Well, one is the realization that profits are under pressure, and there's not very much good news coming into next year. The Federal Reserve has mishandled this raising of interest rates, not pointing out that this can get a real return of a real credit market again, but making it sound like it was bad medicine. And so the benefits of getting more cash back in the banks has been lost. They've made no reference to deregulating some of the banks in terms of onerous burdens on making loans to small businesses. So it's all come together. What the Fed has done, both with quantitative easing, zero interest rates and the like, and now what the European Central Bank is doing, is deflating, not inflating, making it hard for small and new businesses to get credit.
But what changed between today and Wednesday? Because on Wednesday they made the announcement and you saw stocks bounce because it seemed like, you know, traders went in and they read the statement and you saw the dot pattern and it looked like they were only going to raise rates maybe 4 times this year, and they went, okay, well, it's not going to be that bad. Markets were okay, and then something sunk in.
Well, what sunk in is that the Fed doesn't know what it's doing.
But they never have. I mean, nobody ever thought they were. We didn't think on Wednesday they knew what they were doing.
You know, about a year and a half ago, the Federal Reserve, this is a little arcane, did what they call repurchase agreements, which ended up putting more cash in the banks and ended up revving up the loan volume in the economy. We had a couple of quarters of 4% growth. Then the Fed backed off, went back to their bad old ways, so you had less lendable cash in banks, and the economy went back to its 2% rut. So the hope was that this time the Fed was truly going to make changes, run down its bloated portfolio, so again, you have more lendable cash in the banking system. They didn't do it. So clearly, if you don't know, if the pilot of the plane doesn't know what you're doing, you look for your parachute.
Yeah, and that's what we're seeing in markets right now. So what do you see going forward? I mean, this isn't about it just being the end of the year and wanting to, you know, sell off part of your portfolio, realize that, none of that. You're not buying it.
No, I think the U.S. economy will get 2% growth next year. But again, companies... As an average for the whole year? As an average for the whole year, which by our standards, Europe would be pretty good, but by our standards, it's pretty bad. But no one knows what they're doing. They don't know what they're doing in Japan, Europe, and here in the United States. And President Obama's made it very clear there's going to be no change in the war on terror, no change in economic policy. And so the market, if it's going to rise next year, is going to be looking to 2017. Yeah. That's going to anticipate better times. And one little example of the better things that might come is in that crazy bill they just passed in Congress, the budget bill. They removed the ban on oil exports. They're postponing certain taxes on Obamacare. And I think the markets, if they think they're going to get more of that next year, I think they'll overlook a tough 2016 and anticipate a better 2017.
So I think there are a lot of people at home that listen to your assessment of what's going on and agree with you. What would you tell them to do? I mean, how do you position yourself in light of everything that you just said?
Don't panic. That's very hard to do. Remember, emotions are your enemy. As the market takes a tumble, you want to say, I got to get out. I don't want another 2008, 2009. But that's why you get whipsawed and why individuals underperform the market. They get giddy when the market's going up, and they get out when the market's going down. They get whipsawed. Yeah. Stay in it, especially with your retirement money. Your other money, okay, you want to be a timer, go ahead. Retirement money, leave it alone.
Yeah, Steve Forbes, thank you so much. That's good advice.
Thank you.